We're now having a very special conversation on a very special edition of this particular show, where we're taking stock of Amber Enterprises on the back of their Q1 numbers as well as business outlook. Now, we'll be joined by Mr. Jasbir Singh, the Chairman and CEO of Amber Enterprises, on the back of, their and taking us live in the Ambit India conference, which is happening in Singapore on the 22nd and 23rd of August. Good morning, sir, and thank you so much for joining us today. I just wanted to start with, the company's performance in Q1, really strong revenue and EBITDA growth of 40 and 43%. PAT also grew by around roughly 60% in this particular quarter, led by the consumer and electronics divisions. I wanted to start with both of these. So for room air conditioners, we've seen roughly around 50% growth in this particular quarter. If you could just throw some more color on this, how has the quarter one been? Because, because of heat waves, that's been very beneficial to the air conditioning industry and you as well. Talk us through how you see this particular year for this division specifically.
So good morning and thank you for having me on the show. As far as air conditioner season is concerned, everybody knows that it has been a great season for the air conditioner market. We are expecting a good volume growth and value growth. We've seen both finished goods as well as the component business growing. And I believe because of good season, the inventory levels in the market are at a normal level or maybe a lower level. We've seen growth in the July month also. And I expect that this year we should expect the industry growth to be almost in the range of 30 to 35%. And it could also surprise us by 40% number if quarter four goes well. So we are very excited by this growth. Last year, as everybody is aware that it was not a good season for air conditioning industry. But with a good jump this year, the CAGR of the industry has been maintained. So we expect that next 5 years from here, if we see the CAGR getting maintained, industry will be almost double the size what it is going to be this year.
Well, that's some very big numbers that you're saying, doubling in a year. That's very strong numbers. But just wanted to break down the consumer division a bit, sir. Like you spoke about RACs, room air conditioners specifically, which has grown very well. There's also just the non-RAC component business, which is something that the company has been very bullish on, 39% growth in this particular quarter. Now, there are multiple, divisions or sectors within this as well, telecom, smart meters, among others. I just wanted to ask, which are the ones that are contributing specifically very strongly in this particular quarter? And which is the one that you're most positive on for FY25? Because we've seen multiple growth levers across these verticals as well.
So if you've seen a transformative journey of our company from room AC play, we added into the component of room AC. And then finally, we created 3 divisions. One is the consumer durable division, which comprises of room AC and room AC components and non-room AC components, like components for refrigerators, washing machines, telecom equipment, smart meters, etc. Then we have electronics division, where we have a PCB assembly businesses catering to various applications. And we have a PCB business, where board PCB business. And third division is the mobility business, where we do air conditioning for trains and metro cars and buses and etc. And all the 3 divisions contributed in quarter one. But large contribution came from room AC and also electronics. So both the divisions are doing pretty well. And I expect the similar kind of growth to continue. And moving forward also, we are excited by all the 3 divisions because all the 3 divisions are fairly diversified now. And we are no longer relying on one sector, which is room AC. As far as console level balance sheet is concerned, we have now multiple levers of growth, and all the levers of growth are functioning very well. And we are excited for the growth opportunities coming in each and every division.
Thanks so much for giving us the detail across divisions. And I wanted to ask about non-RAC component business. What would be, the current, because it's still a newer business, and what would be the current contribution in the consumer division specifically? Because we saw roughly 1,900 odd crores for the consumer vertical, but within that also, as you mentioned, there are multiple layers. And which segment are you seeing the most positive demand from?
So non-room AC category of business in the consumer durable division is contributing around 25%. And in that 25%, largely it has been driven by telecom products and also smart meters products. We are also growing consumer durable other than air conditioner components, which are refrigerators and washing machine components. That's also growing. But the large 39% growth came from telecom and smart meters in this division.
Also, you have recently also formed a joint venture for the washing machine vertical as well. I just wanted to ask you on the strategy because it's very new that I'm seeing that you're going to, you had non-AC, non-RAC components first, and then you've gone into, manufacturing, the actual product. So as to say, in this case, the washing machine. How are you seeing this particular segment, and would we also see you moving from refrigerating components to making refrigerator as well and some other spaces as well going forward?
So we were already supplying components for washing machine, like washing machine tub assemblies, the outer cases, as well as the electronic portion of electronic PCB boards for washing machines. And it is like a good forward integration for us to get into the full product category. We've opted to get into fully automatic and top load and front load both categories. If you will dissect the washing machine trajectory, the markets are moving a little towards the front load and top load rather than the semi-automatic. And that's why we picked up these two categories to start with. So this year, we will see some small numbers rolling out from the factory, which will be the first year. And next year, we are expecting a good growth. We've already onboarded 4 customers in washing machines, and 4 further more customers are getting added by Q4. So we expect to start next year by 8 customers to begin with. If we see the long-term 10-year story of this, a washing machine is again very underpenetrated product category, and we expect that because of our component strength, it will give us a good leverage for getting into this fully product category. To answer your question, whether we'll get into refrigerators or not, because we are into refrigerator components, as of now, there is no plan to get into refrigerator parts as a full product category.
Just if I could just quiz you on just one follow-up on this, how are you determining, for forward integrating into these divisions? Because we've seen, for multiple components within the EMS industries, we've seen a higher penetration now for TVs because we've seen a lot of capacity come in. Now, the segment washing machine is also picking up amongst peers as well. How do you see forward integrating as a strategy, and how are you deciding which verticals to enter?
See, TV is already penetrated to 88% households. So the room of further penetration is little limited. But if you see air conditioner, which is the least penetrated product category, we are already into that. And then washing machine is currently at about 26% penetration. So it's a big headroom for next 10 years to 15 years in those categories. And that's how we are selecting which categories to get into.
Now, just wanted to come on the electronic divisions. So very strong your numbers in this particular quarter, especially on margins. You grew by roughly 360 basis points. I just wanted to understand, the company's focus on this division, because there are a lot of target segments that you've given in this particular vertical across sectors such as automobiles, smartwatches, and durables. But I also see that PCBAs as well as PCB assembly is also one of the other things. I just wanted to understand within this particular division, currently, are you just assembling it, or are you looking to manufacture PCBs in the future as well? And what are the current, scope of this particular business going forward as well?
So we entered into electronics vertical in 2018 when air conditioner was traveling its journey from fixed speed to inverter AC. And in inverter ACs, the leading component in the bill of material is inverter PCB board, and that's why we entered. But once we understood the sector, then we thought that why we can't grow it into the other applications. So now we have further graduated apart from consumer durables, PCB assemblies. We are now giving solutions in the hearable wearable space. We've added telecom components in the PCBAs. We've also added automobile. We've also added some defense components in the PCBA. And we are currently manufacturing the bare board PCBs also. That is, so we have backward integrated into bare board PCB, and we become one-stop shop for any company who's desiring to buy a full PCB assembled product along with the bare board PCB. So PCB is right now getting largely imported, and we want to be the leading player in the PCB manufacturing. So we've started with single layer, double layer, multi-layer PCB boards, and we will further graduate into various applications moving forward. So today, if I see the total addressable market, both in the PCBA as well as PCB, is quite good. It's largely imported, and there's a lot of import substitution happening. And as our electronic sector is contributing about 115 billion last year, I think this is expected to go to 300 billion. So there will be a lot of scope for both PCBA and PCB businesses put together.
Just want to talk about a couple of divisions within electronics. You already secured an order also in this particular quarter for defense. If you could just talk us through what's the application here, and specifically what are you catering to in this particular vertical?
We are just giving solution in the PCB assembly part in the defense products.
Okay.
For the companies who are serving to final product, who were earlier buying PCB assemblies while importing, but now they have shifted to India. So that's the first onboarding of defense customer we have done, and I think moving forward that business will grow further. But all applications are growing. So wearable is also growing. Telecom, we are seeing a decent growth. We are also seeing good growth in smart meters, electronics, and auto has just started. So we expect that in coming years that will also grow. And we are catering to both EV and non-EV space. So I think we're pretty excited for the electronics vertical. So our journey started from a small 300 crore top line with 3% EBITDA when we just acquired Ilgin Electronics in 2018. But now it has shaped up to a nice EMS company.
One other division that's very interesting that you mentioned before was the railway subsystems. Now you have called out some reasons, external reasons in the delay and revenue fall also in this particular quarter, about 9%. Mumbai Metro delays among other reasons. Now this division has a very strong margin profile, upwards of about 20 odd percent. Do you see some of these issues that have been resolved in this particular quarter in Q2, or how are you seeing this particular vertical for FY25 and 26 as well? Because it's a very long-term story, very differentiated category also. And I wanted to just understand, you have a 2,000 crore order book also for this particular division. Is this something apart from the AC component within trains, or is there something other products also that you're catering to here?
We actually entered into mobility space in 2019. When Government of India announced modernization of railway program and urbanization of metro trains into different cities. And that's where our journey began. And we have traveled a decent journey till now, but largely we were focused on air conditioners supplying in metro as well as in trains such as Vande Bharat and Rajdhani Shatabdi coaches. But then in 2023, we laid out a chart for getting deeper into the bill of material of a passenger car. So if you see one Vande Bharat Express will have one Vande Bharat chair will have a 16 coach formation. So one car, we were already supplying just air conditioner, which was contributing to almost 3% of bill of material. But now we have done TOTs for doors and gangways, and we've developed our own pantry systems. Plus, we've done a joint venture with the South Korean company for making couplers, gears, and pantographs. So our addressability has increased 4 times as a total addressable market is concerned in the railways. And our facilities are getting ready right now. By Q1 of next financial year, 2 facilities will be ready for these new product category. And we have started getting orders also for the new product categories. As far as the delay is concerned, yes, it's because of the external factor, but nothing changes on the long-term horizon of this division, because we all know what plans Ministry of Railways have outnumbered for the new Vande Bharat trains which are going to come in next 5 years, and also the new metro lines which are expanding in different cities. So we are pretty excited now. I think this division has a very good exponential growth opportunities as we have now got deeper into the bill of material of per passenger car, and we are trying to become a multi-product company in the rolling subsystem player in India.
Do you see this addressable market? You mentioned that it was 3% when you were just supplying ACs, and it has grown 4x over the longer term. Do you? I'm not sure if this number is out there already for you, but do you see this moving upwards in the mid-teens or much higher than that as well? Any kind of quantification that you can give us?
No, so we are targeting to address at least 20% of bill of material, and but since the deals have been just recently stitched, we expect that the facilities will be ready in Q1, and there will be 2 or 3 more quarters to go before it starts reflecting into revenues. And that's the reason, and because of the delays, we see a little bit muted growth in this division this year. And by Q4 of next year, this division will start giving revenues in the different product categories. So, and we are also expecting a developmental order from outside India, which will open our doors for the global play going forward.
My final question, sir, on guidance. Now you have increased the guidance for the electronic division's growth from 35% earlier to 45. You mentioned growth on railways, also a 2,000 crore order book. But I wanted to just understand for consumers specifically, do you have any kind of guidance that you're looking at for this particular, depending on the orders? And specifically for railways, you mentioned that there are some external factors as well. How do you see railways revenue this particular year? Margins have been maintained very strongly. It grew in Q1 as well. So just on these as my last question.
So we are excited by the divisional growth, each divisional growth. So we have 3 themes now. We are no more longer just a RAC play. It's consumption theme, which is driving the consumer durable vertical. Then it's a electronics theme, which is largely PCB and PCB, and the infra theme, which is railway vertical. I think very difficult to predict the complete permutation and combination as far as the guidance is concerned, but as we all know that it is a good season this year, and since Q1 has been positive, 50% growth, so we expect that this division will grow in line with the industry growth. And electronics, we've already revised our guidance, so we are in line as far as 45% growth is concerned. Earlier we had guided that it will grow by 35%. As far as railways is concerned, we've revised our guidance for a muted growth this year. But post FY26, this division should see an exponential jump because of this new order book which we have onboarded for the new product categories, as well as the new Vande Bharat trains which will start rolling out by FY27 onwards.
Well, Mr. Singh, thank you so much for joining us today and giving us a very deep picture of what Amber is, entering into. A very fascinating company to look at. Thank you so much for joining us today, and we look forward to our next conversation, sir.
Thank you for having me on the show. Thank you very much.
But that's all the time we have on this edition of this very special conversation at the back of the Ambit conference. Stay tuned to NDTV Profit for more.